Good evening, traders, and welcome to the second lecture where I am teaching you that how basically banks operate. And if you take this master class, then I'm pretty sure that from the same day or the next day, you will be making a lot of money from the trading market. Because the methods that I started teaching for free on my YouTube channel, they are highly accurate, and you will see fantastic results when you will implement these methods into the live market. You will see amazing results, and you will send me your screenshots on Telegram. Okay, so this is the request to all subscribers who are watching these videos. So when they make some profits, so you can find my Telegram channel link in the description of this video below, and you can share your success with me on Telegram. Okay, so please find the link in the description of this video below. Okay, guys, so in this lecture, we will talk about the swing highs and lows, that how the liquidities are available on the swing highs and lows, and how the market makes the liquidity pools, which help you to understand that from which side the market can take the next direction, because this is very, very, and very important. Okay. First of all, let's talk about the single highs and lows. So, for example, just look at this area. Okay, so just look at this area. This is the single high. Okay, you can see this is the single high. And if we talk about this area, this is the single low. Okay, similarly, let's find more single highs and lows. Look, this is the single high. Okay, and this is the single low. Okay, right now this one. Okay, okay, so let's change our chart and look, this is the single low. Okay, and similarly, if we talk about the next chart, let's say this one. So this is, we can somehow say this is the single high. Okay, and similarly, it's making the single low. Okay, so first of all, those who are watching this video, so you know that our trading course has started, and I will guide you the advanced trading methods exactly from the scratch. So make sure that you are going to subscribe this channel, and try your best not to skip the video and not to fast forward your videos. Otherwise you will lose a lot of concepts, because sometimes I will quickly add, you can say that I will throw very good information, and you will simply miss that information if you will fast forward your videos. Okay, because this is for your betterment. This is not going to help me, but if you learn from here, then you will keep my platform for the whole life. You will remember that we have learned the trading from this platform, and now we have become a very good successful trader. Okay, so guys, again, I'm marking the single high like this and the single low like this. So these are the single lows. So why I have marked this one, basically the liquidity is available at these single highs and lows, and the second part is the liquidity is available at the liquidity pools. So what are the liquidity pools? We are going to talk about next in this video. Okay, first of all, you need to understand that whenever the market make a low point, and there is no further area of the retracement from here, like it is not creating any support, so that becomes a single low. But the area where you see most of the data, so for example, let me see, last night I was looking at the Bitcoin. I think so there was a liquidity pool. I'm not sure which time frame I was, so let me take my time frame to the 5 minute. Okay, now just look at this one. Now just look at this scenario. Okay, look at this. So what this is, they have the markets have made the resistance. Okay, and they have created a support here. Okay, like this. Okay, so where you have multiple touches. So for example, look at this one. This is the first touch. This is the first touch of the second touch of the resistance, and this is the third touch of the resistance. And you can see now the question is that why these type of areas are created in the market. The answer is very simple. Normally you will find these type of liquidity pool areas after the big moves. So for example, just look at the previous trend on Bitcoin USD. Okay, if you see, the price has simply moved way high into the upward direction, and then suddenly stopped. Okay, now what do you think? Basically, you guys take the market wrong. Like, you guys believe that the market is running based on the buying pressure and the selling pressure. This concept is wrong. The market is not running based on the buy and sell pressure. Actually, it's working based on the algorithms. So this is the algorithm that the banks and the smart money has given to the algorithm, that after the big move you need to be slow like this. Okay, so this is the part of the algorithm. Now, why? Because these type of areas are the interest areas for the banks. Okay, now what happened? Just I'm going to extend that level. Now just look at this. So just think like a retail trader. First of all, if you have not seen my yesterday video about the lecture one about the smart money concepts, liquidity, if you have not understood the basic liquidity, then you need to quit that video and first of all go back and listen and watch the first video, the lecture number one. It is in my playlist, the free trading course playlist. So first of all, go to the playlist, see that video, and then at second you can watch this video, otherwise you will not understand that concept. Okay, so being a retail trader, what do you think? Okay, so retail trader will think this is the sweet resistance. Okay, this is the sweet resistance, because every time when the market is coming to that resistance, it's getting a rejection. So what is the retail trader mentality? Once the market comes into that area, they open the sell positions. This is the mentality of the retail traders. Okay, I'm going to delete the all other arrows so that you should not be confused. Okay, now just look at here. Again, they sold. Okay, two times. Okay, and also do not forget this one time, because already this they have created the sport. Okay, so one time the market went up and then come down and then hit that sport, you took a buy. Because when I say you took a buy, it means that I'm talking about the retail trader, so don't be confused. Okay, now see what happened next. You sold again, retail traders sold again, and now just a little common sense, just look at this. Okay, I'm going to delete these arrows as well, because you will be otherwise confused. Okay, now look at this one. I'm just going to put a line here. So everyone was selling in that resistance. So a typical mentality, when a retail trader sell from the resistance, when he see that this is the very good resistance and the price is behaving very nicely, so what they do, they put the stop loss just above that resistance. So now here it was going fine. They have created a very good resistance. And then what about this one? If I zoom my picture, then you will see this is good. This is a good move. I mean, I'm not talking about the big moves, but like let's have an example that from the resistance, why this wick is far. Why this wick? Okay, because it was pretty sure that some of the retail traders, or might be maximum on that time, as per the situation, the maximum traders, by considering this as a resistance, because they were exactly selling within that block, so they have set up the stop losses like this. And first of all, the market has taken their stop losses and it made a exactly wick from here. Okay, after making the wick, what happened? Now, those who were buying at this level, okay, so do not forget that if you are staying here, you need to you need to develop your sixth sense. Okay, if you are looking the chart here, then your also eyes should be at this level as well, because the previous and the previous most swing low was available at that level. I hope that you have picked my point. Like, the market is here, but you should keep an eye at this level, because here the market has eliminated the retail traders. It has taken the liquidity. Now just look at here. Now why it's going down? Okay, now why it's going down from here to here? Basically, it was coming to hunt the stop losses. It was coming to hunt the stop losses that were available at that swing low. Okay, I hope now you can understand the concept. Now just look at this. Now, technically, if you were buying from here, so where would be your stop loss? Your stop loss would be just below that support level. So first of all, let me write here. Otherwise, some of the newbie traders will be simply confused at what he is talking about. So when you are considering this as support level, now when the market comes here, they have seen, oh, this is the previous move exactly from this level. So what the retail trader will do? The retail trader will exactly open his buy trade from here. I'm going to remove the top one. Okay. Now, what the market has done, because normally when we talk about the retail trader, even we are still a retail trader, but when we were a beginner, we were also doing the same thing. When the market was coming down and it was coming exactly at the level of the support, then keep on opening up buy positions. And what the market do? The market will go down, and basically it has taken the stop losses, because those traders who have bought from here, their stop losses were below. Now just look at the gap. Now just look at the gap in between the support and in between this level. You can see maximum of the stop losses are taken. And now once the stop losses are taken, now guys, just look at this. Now the banks moves. Look at this. This is the bank move that has arrived on Bitcoin. Now, this is the technical game. This is the technical game you need to think, because this is not a easy market. Yes, if you will take a coaching session from me, I will make things more easy for you, because I also offer private mentorship and I have taught to many students. They are very successful. Okay, so my students are very successful. You can go to Telegram and you can see. Now, these are the bank moves after the market has taken the liquidity. Now you can see Bitcoin has pushed into the upward side. Okay, so this is how the market works. Okay, now I'm going to open any other chart. I'm just going to delete these all situations. Okay, now just look at this one. This was our previous resistance. Now why this candle is coming above the resistance? So if you are smart enough, you know this is done by the banks, this is done by the smart money. And after hitting your stop losses, because the traders, some of the traders have set up the stop losses like this, the market has taken their stop losses. Now it's going down. Okay. Okay. So in that scenarios, you should always be looking like you should keep in your mind that the next swing lows are available here, and even the swing lows are available here. Okay, so this is the good information. Like because the market will not follow the trend. When you are placing your trade and you feel that the price is going very good and we are into the upward trend, suddenly you will see the market will change the trend. For example, we were talking about this area on Bitcoin. So after taking the liquidity, the previous trend was, if I make the trend line, this is the bearish trend line. Okay, but you can see what happened after taking the liquidity. The market will not care about the trend, and then you can see it has suddenly changed into the bullish trend. Okay, now if you make the trend line, it looks like this. Okay, the market, the trends and all this blah blah that is taught to you on YouTube and other platforms, they actually don't work. Okay, now let's talk about the liquidity pools. So guys, now look at this. This level means that this is the liquidity pool level, because there are many touches here. Okay, there are many touches here. Even if you go back, so this is the favorite area. If you see any type of activity like this on any chart, just note down my words. This is the favorite area for the banks, uh, because this is the main point of interest for the banks. And now basically they create such situation for you so that you guys can get trapped. Okay, now just look at this. Beautifully the market is going up and coming down. Wow, very good sport. Again the market pumped up, again it went down. Look at this. What happened now? Again the same thing. Look, I have opened a random chart and you can see, if you were selling from this resistance, your stop losses will be here, here, or maximum here. Okay, some traders have even the set of the stop losses at the top as well. Now just look at this, what the market has actually done with them. After hitting their stop losses, you can see why this is reversed, why it has not exactly continued after this green candle that you can see. Because after this candle, there is one bearish candle. It's okay, fine. Okay, they have trapped you. They have trapped you by showing you a bullish candle that we want to go into the upward trend. But normally, when I am actually trading, I'm looking at the traps. So if you ask me what is the trap here, this is the trap. This green candle is the trap. Why? Because when the market makes a high point, then it comes to make a low point. So it made a slightly low point here, and suddenly the next candle pumped up. So retail trader will think on this green candle that again the market wants to go up, and if I zoom out my chart, then they believe now the market will go to target this area, because they are basically dealing with the support and resistance, and they will be looking to set up their take profits at this area. But look at this, guys. Actually, the market works in a different way. So this was the trap. And from this bearish candle, the next candle went turned bearish. Okay, we basically enter into the sell positions. Okay, if you ask about me, I mostly find out the traps, because the traps are very important. They will give you the traps. Okay, they will give you the traps. Mostly 90% or 80% of the time you will see the traps. So this is the trap candle, and after that you can see this candle was the confirmation. This red candle was the confirmation that instead of price going up, it wants to go down, and now you can see the price is down. So never be a victim of the liquidity pools area. Otherwise the market will simply blow you, and it will not care about you, because I can find more examples, and might be I can help you that how you can avoid the. Okay, just look at this. I have find something here. Okay, just look at this. This is the liquidity pool area. Now just look at this. This was the good spot. Now just you can see how many times the market touched that area. Many times. Okay, if you talk about this, one, two, two, three, and four times the market hit that area. Just look at this, what they have done on the fourth time. They have taken all the stop losses. So basically they sometimes they also do like this. When they create the liquidity pools, then they are ready for the next move, and that move can be bigger. You can see this is the bigger move. Okay, now after the move, now you can see what's going on again. The liquidity pools are in formation, so it means that they are planning another move. So be careful, guys. This is the most important function here, and you need to understand it. Okay, now I can show you my indicator. For example, the market turning points, which is my best seller indicator. So just look at this, what's going on here. So after the market has created a sell, you can see it has taken the, because this was the support, and if you just look at this one, this wick is coming below the support level, because our support level was here, and my indicator was smart enough that it has provided you a buy opportunity exactly from here, and you made the profit. Okay, and if we talk about here, we don't have the level because mostly it deals with the recent levels. Okay, now I can show you more about my indicator, like for example. Okay, now just look at this. This is the beauty of my indicator. In real time it is providing you a buying opportunity. Okay, and just look at this, selling opportunity. Okay, look at there. We don't have received any signal from the indicator when the market was making a liquidity pool. Yes, they basically braked up, eaten the stop losses, and look how smart the market turning point was. It has provided a proper liquidity level here, and now you can see the price was rejected. Again, it has created another sell opportunity here. Look at this, the price is down now. So the problem is, guys, when you use the indicators, you basically get the indicators from the platforms like RSI. The people are developing the indicators based on the RSI, blah blah. Look at this, how smart my indicator is. Just look at this. This was the proper sport, and this was the sport. And just look at my buying opportunity level. It was coming because it was taking in consideration that this is the proper liquidation level for the market, and the market will come to blow all these guys who are sitting at these swing lows. For example, this swing low. Okay, this swing low. Okay, so their liquidities were available. So now you can see what the market has done. My indicator first of all has pointed you the selling opportunity, and then after hitting the all the liquidities that are available at this swing low and this swing low, after eliminating everyone, and they have taken the buy, and you can see the market is up. And those students who have my this market turning points indicator, they are milking a lot of money, because if you go to my telegram channel, and you will see a good results here. Okay, now just look at this one. After taking the liquidity of the sport level here, now you can see, now the buying opportunity in the market is already in the move into the upward side. So this market provides a common sense. Okay, now for example, this is the proper sport, but the market breaks that sport. Now if there will be any buying opportunity here, my indicator, the market turning points, will provide that buying opportunity in real time. And my students know very well, like this is the real time data. You can see selling opportunities are being created. And if we go to Bitcoin, look at this, the Bitcoin is just dropped like 10 minutes ago. You can see from the selling opportunity. So what I told you, just what I told you that this is the proper resistance on that time. Just look at this. Okay, so you guys believe that the indicators does not work. Yes, the other indicators that are available for free on TradingView, they don't work. Yes, but my indicator works if you use a slight common sense. You can see this is the resistance. The market breaks the resistance. And now, after taking this lecture, that the stop losses of that area that were available here, they are hidden. The market has hit their stop losses. Now just look at this. A common sense in my indicator, it is providing you a selling level. You sold and you are in profits. So guys, that's why I repeat, because sometimes I get a message on my telegram channel that indicators don't work. Yes, they don't work. Yes, but if you're getting the indicators from a platform that the guys know that how their work is, then it will be very useful. For example, look at this. This was the resistance. Now this is in front of you. This is not my created data. This is the live market. So you can see Great Britain Pound AUD, this was the proper resistance. The market first blown the accounts, and you can see this was the second confirmation for my students that market turning points has the selling opportunity. The liquidity is taken. You can see the price is down. So guys, is there any difficulty? No, there is no difficulty, because this indicator is guiding you in real time. Just use your common sense here as well. This was the sport. The market break below, buying opportunity is coming. It means that the market wants to target the upper side, because the liquidity that was available at this area, it's already taken. The market has already made a wick here. They are blown. Okay, so where the next liquidity is available? The next liquidity is available at the top swing high. Okay, so common sense. Just use your common sense, and you will understand that what I am talking, it really works. It really works. Now just look at this one. Another part. Okay, this was your resistance. The previously the market has received the rejection from here. Okay, now just look at this. This is the trap. Resistance, when the market comes to the resistance, why there was need to create one red candle? Just ask yourself, why there was need to create a red candle. This candle was intentionally created to trap retail traders, and now you can see they simply went up. Okay, because after looking at one bearish candle, what the retail trader do? Retail trader enter into the, simply by one bearish candle, it's a confirmation for him. So he enter into the sell trade. Now they have taken the liquidity, they have eaten their stop losses. And look where my indicator is pointing you the sell opportunity. The sell opportunity was at the top, and it means that my indicator is highly what we can say accurate. Look at this. This is the sport. This was the sport, but my indicator knew the market will first break the sport and then it will create a buying opportunity. Okay, it's not only about the liquidity. My market turning points indicator includes a lot of things, like even if you ask, you can see the market does not come to eat that swing low, because it's using many factors, many confirmations, and you can see this buying opportunity was respected, and you can see the price again went up. There are a lot of factors, and I will teach you one by one in my coaching sessions. And here if you keep an eye, okay, you will learn a lot. Even If you talk about my bank indicator, that is also very, very strong because it is adding the lot of confirmations. You can see the bank selling level. There are a lot of things. If you don't have my indicators, it means that you don't know anything about me and you don't know anything about the trading market, because the indicators that you guys are normally using, they don't work. I mostly use my indicator, that is the bank order, and I use the market turning points. These are my two best indicators. Okay, guys. So next time, when you look at the liquidity pools, you need to be careful. Now I'm going to change my time frame to the 1 hour so that I can show you if there is any situation. Look at this one. Now this is the most interesting part uh, for the banks. Okay, now look at this, what they have done. Just technically, good resistance, good support, but this time the support was broken and they have taken the liquidity, they have taken the upright, and after they have not created a move. Even still, if you just look at the price, it's inside the liquidity pool, it has gone nowhere. So it means that this is the situation that is under construction right now, under observation. So you need to take care of this side. Okay, so once the market will break at one side, so it can even reverse to the, like, it can also do like this. It can even come and break the upper side, and because the stop losses will be they will take the stop losses, and sometimes what the market do, you can see the other liquidity levels are too close. So what the market will do, market will take their liquidity as well, and after taking their liquidity, it can be again down. So this is how the market operates, and I will guide you step by step. With each video, you will understand the things very commonly, and you will simply love these lectures, because I bet you that if you follow my lectures, and if you do not miss my lectures, you do not fast forward my lectures, then you will love it. Look at this. EuroCAD 1 hour. The First of all, you can see good resistance, good support. Yes, for a retail trader, the market is moving very nicely, and he has getting more faith on the support and resistance. And now what has happened? They have blown your sell trades, because when the market come backs again here, you will sell, and they have blown you. And now you can see why the market is coming down. You know why it's coming down? Because I have told you the liquidity is taken, and if I on my market turning points indicator, you can see that's the selling opportunity. Okay, now my students will not take that buy, because they will be more interested in sell, because the liquidity is taken. And when anyone do the personal mentorship with me, they know some rules about the indicator, because we do not follow the indicators blindly. Okay, so guys, I think so. From this video, you have learned the liquidity pools, and you can see even the liquidity pools are here, and the market breaks the upper side, and it has taken the stop losses. Okay, so the market can come to eat the stop losses that are available at the single highs, and it can come to eat the stop losses that are available at the liquidity pools. The market will hunt the both sides. So always, when you are sitting on any, sorry, when you are following any chart. Okay, so for example, let's take an example. You are trading here. Okay, first of all, you need to consider that first liquidity is available here. So you need to keep your eye that what happened here, what is the situation that is creating here, and if the market wants to reverse from here, where the next liquidities are available. You can also follow the liquidities that are available on the downward side. Might be this is possible. The market will first break and come and eat the liquidity that is available here, and after eating the liquidity, the market will come and make a lower point here, and then after eating that liquidity, it will again go back here. So a common sense, because we are mostly doing swing trades and we are doing scalping, but with a common sense. Like, it's very easy for me to scalp that area. It's not difficult for me. Like, this was the resistance. The market breaks up, now it's reversing. It's very easy for me. Okay, now even if you go to the 1 minute chart, let's see. Let's go to gold. Okay, now look at there. What's happening on gold right now? Okay, first of all, look at this. This was the rejection. This was the resistance. The market breaks up and breaks up above. It has blown the sellers here, because those who were selling on this level, the market has first of all blown them. Okay, then it created a support level here. Okay, look at this one. This has the support level. Now the market comes, it's shown you a couple of bullish candles from here. You took a buy. Okay, now you can see they have instantly taken you down because your stop losses were available below. Okay, so guys, how is that easy for me to read the market or not? Definitely, if I'm teaching you, it's easy for me because I'm teaching you. So I'm telling you with the common sense, because this is not a easy job. Because you can see this is the resistance, the market breaks up, it and your stop loss is reverse. Now just imagine how much money I can make with trading just by following that technique. Okay, how much money I can make? I can make a lot of money if you follow. That's why I say if you follow my lectures, you can be a king in the trading market. You can see this was the resistance. Okay, and you can see the market simply blown up, taken your liquidity. Then you can see you got two candles reverse. So within two candles, you can make a lot of profit. Even yes, sometimes you need to take care of this thing, that the markets are on the trending side. So, for example, this was the proper support level, but the market has taken the liquidity. It has made a bearish candle. Now, what happens? Again, it breaks above. So, normally, when it breaks above, like this candle is closed above, so even after taking the liquidity, the market is not satisfied. So, why? Okay, so let's see why it's rejected from here. I'm going to mark that level first of all. Let's see, take an example why it is rejected from this zone. Because after taking this liquidity, why it doesn't stop? So let me go to the 15-minute chart, for example. Let me see what was the situation here. Okay, I want to see. Okay, basically gold is trading at the very high, so we cannot choose that chart. Okay, so for example, let's see here, somewhere here. Why? Oh, sorry, this is the 15-minute chart. Basically, first of all, we want to go on the 5-minute. Okay, so for example, this was the resistance, but the market didn't stop, it went up. So let's mark this area where it went up, and let's see on the higher time frame what it was. Okay, so what it was? Okay, now just a common sense. Look, this was the area that I have marked on the 1-minute chart, right? So what you see here, if I extend that part, now you can see what that was, why the market has went up to here, why the market went trending on 1 minute. The reason was there was the liquidity that was available on the 15-minute time frame. That is why the market continued its pattern, and it has taken that liquidity, hit the stop losses of the traders who were selling from here, and now you can see it's reversed. Understand that concept? I repeat, I'm going back to the 1-minute chart, and you see that this was the resistance. Okay, this was the resistance. But so technically, after taking the liquidity, after hunting the stop losses of the sellers who were selling here, the market should have went into the downward direction exactly from here. But why it breaks above? Why this candle breaks above? That was very simple. Because on the 15-minute, look, if I mark that area, that why the market went up to here, if you go and see, what you will see in common, that actually there was a resistance. If I extend that part, you can see there was a resistance available at that area. That is the reason the market comes up. And now why it is going down? Now answer is very simple. They have taken their stop losses. That is why it's going down. Okay, so guys, don't think that we if I don't make any videos, so don't think that I don't have knowledge. I have immense knowledge. I have a lot of knowledge of the trading market, and you will realize this thing when I will throw my lectures in front of you, and you will see amazing results. And you will see. Okay, look at this one, another trap I can show you. You can see this is the resistance. Now exactly from the resistance they have shown you a bearish candle. Just look at this. And once the retail trader enter into the short trade, they have taken the market up. Everything is going against you. You need to understand why the things are going against you, because you are reading the books, you are reading the articles, you are watching the random videos on YouTube, you are learning about the support and resistance, you are working on the different moving averages concept. Yes, I have my personal moving average strategy, and someday if you will make me happy, then might be I will share with you. And if you follow my moving average strategy, you will be making a lot of money. But no one knows on YouTube, no one knows on any other platform, because I have only shared my moving average strategy with my close students. Not, I mean, we are like 10 to 15 to 20 people maximum who know about my moving average strategy, and when we get a good setup, we definitely trade that one. Okay, so understand, the thing that is viral on YouTube, it's not going to make you money, because the banks note down these all concepts and they always prefer to goes against you. That is why my indicators, the market turning point indicator, look, what my market turning point indicator is telling you, look, it has not given you a selling opportunity level from here, it is giving you a proper selling opportunity level from here. He is very very smart, he's very very smart, he's analyzing a lot of things, and that is why I say that my indicator is very powerful. And some people send a message on Telegram, no, it's a simple indicator. If it's a simple indicator, then I think you should use your own indicators, because they will be making billions for you. And the powerful indicators like this, yes, they are not working, no, they actually work, so you need to rectify yourself. So guys, this is all about the swing highs and the liquidity pools, that if you follow the liquidity patterns that are available on the swing lows and the liquidity pools, and you can save yourself from the traps that are set by the big banks, and you can exactly make a lot of money when you will be trading with their flow, you will be trading with them, you will not be trading with them. Yes, I do have so many techniques, but I basically teach those techniques in the personal mentorship, because I cannot throw everything here, otherwise the banks will know. Because when I throw something to my personal students, then they also make a promise with me that they will keep the things hidden and they will not share in the market. That is why I only share with a few people in the personal mentorship, because there are a lot of tricks to even to deal with the liquidity. So I hope you have learned something from the today's lecture, and hopefully there will be more lectures, because I will be teaching you everything from the scratch. So keep updated with the YouTube channel. And the second thing, the more you like, the more you share, and the more you comment on the video, I will be making more videos. If your response will be slow, if your views will be slow, and you will not be sharing this important stuff, then definitely I will be might be not uploading in future, or might be I will be uploading very slow. It totally depends on your interest. If I see that you guys are taking interest, and I will understand your the interest through sharing, through likes, and through your comments. And if you will stop me showing your interest, then definitely no one is free here to make the videos like this and to throw the premium knowledge for free on YouTube. So please understand. Okay, if you care about me, I will definitely care about you. And those who want to learn through a private mentorship, they can even contact on Telegram. Otherwise, those who cannot afford my fee, they can simply watch these lectures, and they will be a wonderful trader in future. So best of luck, thank you very much, and hopefully I will be back with the next lecture.